Hey traders, Akil Stokes here, and welcome back to another weekend edition of The Trading Edge. Typically in these videos, I'm sharing with you a new trading idea that's on my radar, mixed in with a little lesson on trading psychology, something that's going to help you work along that path of becoming an independent, consistently profitable trader. However, this week I want to do something different. This week I wanted to share with you a trade that we recently took in our live trading room because I really think it provides a great educational opportunity to show you what full analysis looks like. You see, many traders think that trading essentially consists of loading up a random chart on a random time frame and just finding an opportunity that looks good, that feels good, something that maybe a trader friend told them about. But in reality, it's a lot different, right? Professional traders treat their trading like a business. And what that means is that we have a process, we have a routine that we follow before ever entering a trade. And part of the routine that we teach here at Tier 1 Trading is the IPDE process: identify, predict, decide, execute. If you guys have been followers of this video, you've heard this a million times. By the way, thank you. Just reached the 40,000 subscriber mark, so I appreciate all the support. But this video shows an example of that throughout our live trading day, and really shows you how we set up our trading ideas in the beginning and then we follow through on them at the end. And what I mean by that is I always start the live room by looking at the higher time frames. Although this is going to be a day trading opportunity, I am mainly a swing trader, so I mainly operate on the higher time frames. And typically with swing trading, those trades take a long time to really pan out. If you look at last week's video, we took a look at the Aussie dollar. That was a pair that was on our radar for 10 days in advance, and we finally got the follow through this week. Great move, by the way. But what you're going to see in this video is the beginning analysis, the swing trading analysis, where we simply identify what price is doing, where price is at, and then we start developing an idea on what side of the market we want to be on. And then once we know what side of the market we want to be on, that's where, as a day trader, we can really dial down to those lower time frames and really look for reasons to get involved in the trade. So check it out. It's a trade on the pound dollar, and I hope you guys enjoy. And if anything, what would switch now, let's see where we're at here. Our zone is there to about here. If anything now, the mindset switches from looking for trend continuation opportunities to what? We're now trading at previous structure. Do we still want to look for buying opportunities at previous structure, or the opposite? We want to look for selling opportunities now. Yep. So now the mindset has shifted to look for some relief. And we just saw a big rally. You can see high momentum candles here. I would look for a relief back down into our previous level of structure. So our previous level of structure is 132.14. We're currently trading at 132.62. So about 50 pips of potential movement here. Matt says Gartley on the daily almost stopped out. Yeah, so I would look for this. I would look for counter trend trading opportunities. Pay attention to what happens up here. Now, keep in mind, we're not at the highs of previous structure, so that may influence how aggressive or conservative you are. If you remember, our high level is a little bit higher up here, closer to that 133 level. So that's going to be the safest place to put stops. But I would keep an eye on this level for counter trend trading opportunities. So something like a double top, something like a 26.18. If you're more aggressive, maybe if we get a pin bar, lower low, lower close, reversal, something like that. I shall allow it. Let's see real quick. If you do have any more questions, type them in. I want to take a quick look back at pound dollar because we're getting a reversal signal. We just got a bearish or a head and shoulders top on the range bar chart on the pound dollar. And I don't recall if this was the one that was at previous structure or not at previous structure. Okay, it was. So remember pound dollar here. We're looking for a potential reversal on pound dollar. A little bit of a relief. Again, you can still look for double tops here, guys. That's going to be your safest option, a double top here. if you're on the range bar chart, we just got a head and shoulders top. And again, more proof. What do I always say about range bar trading? If you're going to be a range bar trading, what do you have to do? You have to actively be looking at these things, right? Because if you're trading a breakout, that came right here. So you got to actively be looking at this thing. But what I'll look for if you're a head and shoulders trader, we have the breakout, confirm head and shoulders pattern. Look for the retest and the potential continuation down. Now the question is, if we're going to see some relief, where are we going to see that relief to? Let me just bounce out to our higher time frame. And we could see relief as low as 132.15s. All right, so 132.15 is what we could see some relief to here on the pound dollar. Let's bump that up a little bit to about 132.20s with that 3D2 Fibonacci retracement. Is there structure there? Yep, right here. Right in there. Unless you're referring to the dollar Canada. If not, then let me know. Let me know which one you're referring to, since we're kind of all over the place. So 132.15 is target level for pound dollar. Again, range bar chart, you do have the head and shoulders. You can look for a head and shoulders retracement back into that shoulder line. If you're on a lower time frame, such as a 15 or a 5, keep an eye out for a double top. Look for a retest of structure. RSI has clearly been overbought, right? You'll see that more clearly on the 15. Retest of structure. Look for diversions on the RSI. Now you've got structure. You've got double top. You've got RSI oversold. You've got RSI divergence. Building a case for entry. CTS Trading 101. CTS Trading 101. Where is the structure on the double top? I shall show you. Let's just draw a line right here. And let's just load up a 2 for you because that'll make it easier. Look left. Structure leaves clues. Right in here. Right in there. Up in here, up in here. Ugly? No. No, not at all, no. Right, there's never going to be a perfect fit. Pound yen rallying, or pound dollar rallying, so watch out for that retracement, guys. Todd says, can I ask another question about the pound dollar? Yes, give me a second because I'm going to be entering this. Crap, come on, Nikhil, get in here. Shoot. All right, I'm short at market on pound dollar. So just give me a second, guys. Let me just, I need to handle my business first. 132.87. I'm going to get above this even handle number right here. There we go. Buy, stop. I'll get my screen over in a little bit. I'll show you guys what I did. This was the head and shoulders we looked at. Sorry for rushing, but it happens quick. What I did here, let me just get these targets in. 132.23. 132.23. 132, right here actually. 132, yeah, 32. Okay. Boom. 1 in, 1 out. Perfect. There we go, baby. All right. So we're looking at the head and shoulders here. Sorry if you guys just came on. That was a little fast. What I was looking for was the pullback, right? So we got our pullback. We got our lower low, lower close right here. Now, again, why you saw me almost go into panic mode, because this move happened within a matter of seconds, right? So we exhausted this was our new structure low right here at about 9:11, right? You can notice then we came up here. We started pulling back, 9:15, this candle, 9:16, that candle, 9:18, 9:20, 9:20, or I should say this, 9:20 in 6 seconds, 9:20 in 8 seconds, 9:20 in 12 seconds, 9:20 in 21 seconds, 9:20 in 25 seconds, 9:20 in 36 seconds, 9:20 in 41 seconds, 9:20 in 57 seconds, 9:22. You guys see that? You guys that want to trade range bar candles, 1, 2, 3, 4, 5, 6, 7 candles within the minute, including my entry signal. Lower low, lower close. This candle right here. So when I was talking, I was watching it, right? And I saw the pullback, and immediately in your head, you're like, oh, you know, I got 5 minutes or whatever like that. And then guess what started printing? Those candles started printing. And that's why I didn't go into panic mode. Well, my version of panic mode, I basically told you guys, okay, give me a second. I need to concentrate. And I had to click, get my order on, boom, 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 before the market ran away. Because there have been times where it moves so quick, guys, that the market may already rally before I have a chance to enter. And that's the thing about range bars, guys. You have to be quick. You have to pay them attention because the move will go so fast. The move comes and goes so fast. And you know, this is why I don't trade range bars now, because there's no way, I mean, I can barely teach and trade at the same time. But to try and actively trade range bars and involve myself in teaching, in the discussion with you guys, there's no way. Back when I was a range bar only trader for my day trading, 4 charts. That's all. That's all I can manage. 4 charts. I find my best 4 setups for the day, and I watch those charts like a hawk. And we've caught, you can watch some of my old videos. They're probably on the other channel. But there have been moves in range bars where I've caught hundreds of pips. And everyone's like, oh man, Nikhil, you made that look so easy. But you don't see the fact that I'm sitting in front of my computer for the last 3 hours waiting for a single thing to happen. And I can't go to the bathroom, I can't get food, because the minute that you step away, it could happen. You don't see that part of it. You don't see the many opportunities that get missed. You take a phone call, miss the trade, crap. Change a dirty diaper, miss the trade, crap. You just went for a walk, right? No one wants to be in front of their computer for 4 straight hours, right? You take a 15-minute break just to, you know, relax a little bit and stretch. Crap, missed the trade. It's grueling, man. It is grueling. It is like being a sniper, guys, where you're just sitting there. Sitting, waiting for that split second of opportunity. You've got 1 shot. It's tough, man. So that was a cool example. You guys got to see it live. Again, I don't want to call it a panic. It was my version of a panic, a controlled panic. But it was basically shut up, don't talk to me. Don't you talk to me, I'm busy. But that was pretty cool to see. Hey guys, Nikhil here. Just want to follow up on the pound dollar trade that we took earlier in the live room and give you a little bit of an update. You can see that we are down at my profit targets. They did not get triggered yet, but hopefully you'll get to see this live. But I want to just walk you through kind of the psychology behind the trade. I am actively managing this trade as well. So even if things go wrong, you can see that my stop placement is already at a level where I can lock in profit. And that's one of my goals in trading, is to put myself in a position where I can either reduce my risk as quick as possible or lock in profit as quick as possible. And that's good from a financial standpoint, of course. You always want to be in a position where, you know, worst case scenario, you make money, assuming it's within your rules, but psychologically as well, right? It's, you know, you're looking at this right now, and for some of you, you're probably asking, how the heck are you holding on to this position? You know, price is right at your target level. Why don't you just take it out? Why don't you remove it? Isn't it driving you crazy? And you'll see this a lot. There we go, boom. You'll see this a lot of time at other levels as well. And just psychologically for me, when I know that I've locked in profits, I pardon for that annoying sound in the background, but personally, when I'm able to get my stop loss at a place where I know that I've locked in profits, it gives you a little bit of a relief, right? You know that you can't lose money. It gives you a little bit of a freedom. The burden is kind of off your shoulders, and it allows you to let the market play out to its full potential. Now, at the same time, you'll notice that this wasn't a pain-free winner. There wasn't a lot of pain in there, but you can see that after our initial head and shoulders pattern, right, we didn't just go straight down to our target profit. We kind of ebbed and flowed a little bit, right? If you guys remember, we entered right here, and then we kind of came down, putting us in profit, getting us all excited. Yeah, it's going to be a nice winner. And then we came back up, putting us in panic. No, it's going to lose. Then we came back down into profit. Okay, lower low, lower close. This is going to win. Then it came all the way back up, right? Putting us in back to break even. Oh no, panic, panic. And this is why it's important to, one, put your stop placement at an initial level where it's safe, where it's protected. Putting your stop loss in a place not where it's as close as possible to your break-even point or as close as possible to your entry, but putting your stop loss at a place where the market has proven that your theory, your reason for getting short in the first place is wrong. And you can see that if you go back to the initial analysis, how we hit our stop loss above that 133 even handle, above the head of our head and shoulders pattern. All of this little back and forth doesn't really matter much, right? Because as long as we're within this area, right, price doesn't really tell us that we're right or we're wrong. So there's no need to panic. There's no even need to get excited about having a win. And then finally, once we broke out of that level, once we've proven that the market is more likely to go in our direction than against us, then we can start locking in that profit safely, or I should say reducing that risk, and then hopefully locking in that profit safely without doing it so soon or too soon and really stepping on our own feet and sabotaging us. And that's a circumstance that many traders get into. I spoke to a trader on the Twitter this morning who said the same thing. He showed me a trading opportunity where he's like, man, where trailing a stop goes bad. And he trailed his stop loss too tight. Price had stopped, stopped him out, hit his stop loss, and then rallied down in his initial direction. And he missed a whole bunch of pips simply because he was being too tight with that stop loss. And it's a fine line between what's too tight and what's too conservative. And that's something that hopefully we can help you with during the process. So anyway, nice trade today. Like showing you this. This was a good trade from top to bottom because it was something that we analyzed at the very beginning of our live room, meaning the second we opened the door and we saw that pound strength, we automatically put it on our radar on what to look for, looking for that counter trend trading opportunity. And then it's something that we just locked in on, we followed through throughout the live room trading period, and we were able to get a trading opportunity and it ended up winning. So it's a perfect example. These things don't always win, don't get me wrong. Again, I'm not sure of how much of the live room session I'm going to show you in this clip. And of course, if you're in the tier 1 platform, I did upload the full recording of today's live room trading session today. You can go and view that. But I started off the day with a loser on Euro Yen, right? So it's not one of those deals where I just come in and win all the time. No, I lost one this morning. I won one today. I got to look at the stats to see if I'm up or down for the day. And honestly, that doesn't matter. I took 2 good trades. And as long as I continue to take good trades, I'm going to be on the profitable side of the market, big picture. So I hope you guys enjoyed this video. Again, a little bit different than what I usually do. Typically, I'm showing you trading opportunities that are on my radar, but you know what? I'm doing that every day, so it gets kind of boring. I want to switch it up every once in a while and give you something different. But I hope you guys enjoy. Once again, before I leave, thank you again for helping me reach that 40,000 subscriber mark. 40,000 isn't a major number by any means, but I kind of live my life by the philosophy, celebrate all wins, right? There's enough negativity in life. So if there's ever anything to celebrate, no matter how small it is, you celebrate it and infuse yourself with that positive thinking. That's going to help other aspects of your life. But the next number, 50,000, let's try to reach that. And the best way you can help me do so is by continuing to hit that like button, continuing to share this video on social media, Twitter, LinkedIn, Facebook, Instagram, wherever you're at. Share it with a friend and hopefully positively affect another trader. And of course, leaving me a comment below. YouTube loves that, right? Negative or positive, I don't care, just leave it, it likes it. Lastly, before I go, if you haven't done so already, make sure you check out the most recent episode of the Trading Coach podcast. Should be episode number 83. It's a fantastic interview with a young trader, right? A struggling trader turned professional money manager at the age of 25. And he shares some great insight on kind of the obstacles that he had to overcome to get there, kind of the hoops and whatnot he had to jump through to start his own business, taking all those dumb tests and the background checks and all that stuff. And then kind of his mindset on what makes a good trader and what you need to do if you want to achieve the same. It's an amazing video. Make sure you check it out. So until next time, guys, plan your trade, trade your plan. I appreciate the support, and you guys have a great weekend.